Hello, traders. Gary Wagner here. It is 12:15 in Honolulu, 5:15 in New York on Thursday, 16th day of November 2023, and this is the Daily Report for Gold and Silver. A strong performance in the precious metals today. Gold and silver both moved over a full percent higher. In the case of gold, we are now looking at the February contract. Even though December is still most active, first notice day will come up within about a week, and therefore it does not make sense to place trades with that type of limitation. That being said, as you know, we entered a trade the other day, got in at $1,988. As I spoke about yesterday, I thought that was a gift because I didn't want to buy the highs. And at that point in time, I truly believed that we would see the February contract break and close above 2,000, thereby making that a point of technical support rather than resistance. That, in fact, happened today. Currently, we have gold sitting at $2,004.10. We are looking at the activity in Australia. That is this small red box here. This is today's activity right here. You can see the high was 2011. The low was 1979, and it closed at $2,004.50. Net change up $21. I am going to leave our stop where it is. Look at the low, 79. Our stop is just below that at around 70. And my sense is while we put on some excellent trades this year, the one thing that has time and time again been to my detriment was raising stops too quickly in attempt to either lessen the exposure if we're incorrect or lock in profits if we are correct. I want to change that a little bit because since we have till February, I certainly believe we could see gold move substantially higher quite easily, which is why we are going to modify our targets. They are still the same that we talked about yesterday. I would be very comfortable if we got out near these highs. However, if they simply break right through them, and this is our next level of support, there's a couple of things we can do. We can get a put option a little bit below that and then not even worry about a stop, because if the market comes down, the put option will basically lock in the profits on the long side of the futures contract. The reason you would do this strategy rather than, say, buying December and selling February is with an option. You are paying for premium, but there is a defined risk parameter. And so it is a very tangible way to work with risks. We'll talk about that more on some upcoming shows. One of the techniques that we use to identify strength of trend, moments of weakness, potential pivots is a Heikin Ashi or Japanese average chart. It in essence filters out the noise because when we look at this chart of gold, it's the same one we just saw, February contract of COMEX gold. We can see that during the October rally, you can see that in many occasions you have not only no lower wick, but on a couple of them, you have no upper wick either. But here's the existence of where we are now since the pivot occurred following the sell-off. These candles, in terms of their body size, have consistently grown since the pivot candle, the first occurrence of a green candle, which will almost always be a small-bodied camera. You can see the red pivot candle here. You can see the pivot candle here and here, and multiple ones here. Typically, what happens is as a market is in rally mode, body size gets bigger. As it begins to wane, we see the return of lower wicks, and then we will typically get a pivot candle, and that pivot candle is characterized as A, a color change, and B, the pivot candle is typically a very small pivot candle. Now, in the case of a strong reversal, such as the October rally, because It was based on a major fundamental event, the attack of Israel that led to an all-in-out war. You can see that although you had a red pivot candle, the first candle that formed was exceedingly strong. And when you look at that same candle type on a candlestick chart, it actually gapped strongly to the upside on that particular day. I want to look at gold through all three major candlestick chart types: Japanese candlestick, Heikin-Ashi, and this one, the three-line break chart. As we've discussed on many occasions, the key difference is that you don't get a new bar or candle unless a predefined sequence happens. In a three-line break chart, it has to have, I believe, 3 consecutive higher highs. We are getting our projection moving it higher. You can see this color change. So our candlestick chart, our Heikin-Ashi chart, and our three-line break chart all appear to be suggesting that gold is headed higher. Traders, maintain your current long position as well as your stop. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.